is man, let's go ahead and get into this video, man. We about to listen to some ICT talking about being a freak of nature and just wanting to be overpriced like white on rice. But these levels, these boxes that I have drawn on my chart are key levels of liquidity that you just have to check out.
And mid-figure levels. I teach all that stuff, and I hint at a lot of things even in my free tutorials. So don't think if you just watched this video in your first time here and you found me just put this video, don't think that I'm teasing, dangling a carrot. There's a lot of lessons in this YouTube channel that if a diligent student sits down, takes copious notes, and really studies the things that I draw your attention to, you will never need to buy a signal service. You'll never need to buy a trading course if you just want to go in and find a way of trading. My YouTube channel teaches that. But my mentorship level content is for the freaks that just want to know everything. Okay? And then know that they know. That's the difference. You can be profitable with the content that I give on this YouTube channel. Absolutely. Will you be a freak of nature? Probably not. And most of you really don't really care to be a freak of nature. But I know some of you young guys out there, you just want to be superhuman. But if you look at how price trades down into these levels, now obviously I have these two vertical lines, which will make sense in a moment, but we spiked down through that 92 big figure, and today's low is, it's not right, let's see, there it is, 91.75, okay, 91.75. So it spiked through 25 pips below the 92 big figure. I was drawing everyone's attention here while this price was declining. We had this target here first. We managed and seen how price traded through that. We wanted to see a big displacement below that. We got it. Then the same thing. We want to see a big displacement below this low. We got it. Okay, so there's a volume imbalance here, calling that high, and this high is here. Volume imbalance there. Okay, so that's not support resistance. That is price delivery. It's the algorithm going back to points of reference that it needs to refer to cause the market to be efficiently delivered. Now, it sounds like a whole bunch of mumbo jumbo, I know, but it's the truth. The market, when it goes reaching down here, right away everybody's thinking, well, this is the old support, so it's going to trade down to there and it might bounce. I used to think like that, and you probably think like that too. Or we're probably thinking that if you were looking at the dollar. Or you're probably asking yourself, why didn't it do that? Or why didn't it bounce at that level there? Because the algorithm was going to reprice below this low and target this level down here. We knew about it for months. Now I'm telling you why we knew about it. So that way you can investigate it and see and study all the price action between here and here and how many trading opportunities were available. Some of you may be thinking, well, if you can call these moves, why don't you get short dollar, long foreign currency, and hold all these moves in every foreign currency and be a billionaire? I've already stated that I don't have the comfort of holding on to these positions because I have a very short-term personality. Like, I'm changing my mind a lot, like just like that. And I've made my mind up over a dozen different changes in what I wanted to talk about today. That's why I was delayed. Nothing really was delaying me. It's just, what did I want to talk about today? Did I want to go this far? Did I not want to go this far? And these are moves that already happened. So my students can't be upset about this. And plus, it's my content. I can do whatever I want to do with it. But you're not learning mentorship by me doing this. I'm just like I'm doing in the core content lessons. I'm providing you an example of a concept. Providing an example is not the same as me saying, okay, now we're expecting the price to go here, and then I go back in and I fill in all the gaps with why the details led me to that decision. And I'm 90-some% accurate in terms of where the market's going to go in a higher time frame. So that's me playing the scout, okay, or the spotter for you as a developing sniper. I said I wasn't going to use those themes, but it just fits right now for me to be able to justify what it is that I do as a teacher. I use my experience and the years I've been doing this, and I lend that to my students. So they're not trying to be bullish on dollar here. Their framework is outlining short opportunities on dollar, which would be the opposite in foreign currency, which would be long currencies. Okay, so with all that said, that's the framework. So we have this. I'll put this on the chart so you can see it. This is the volume imbalance. Okay, look at the bodies respecting it in here, and then we get one little spike that takes out these relative equal highs, and then it goes lower. The context was that volume imbalance targeting this low and then ultimately going down here. Scrunched up, so you can appreciate the full fractal. There you go. Okay, so I'm not looking at this low here or this low here. I'm looking at all the storyline in this price move higher. And where my eye goes is the imbalance or liquidity pools. There's only two decisions I need to make about my trade, because the bias is the easy thing. If I want to be a buyer or a seller, that's the easy stuff. And I know I probably just offended a lot of you. Well, that's the thing I'm struggling with, Michael. How could you say that? That's ignorant. You're not sensitive to my needs. Listen, I'm not laughing at you. I'm laughing at that's how I felt too. Okay, back in the 90s, I felt like that too. I was like, man, these people write these books, or I'm watching these VHS tapes, because that's what we were using back then, and then eventually CDs. And all this stuff, I'm like, they make references to things like I should know it, but they're not really teaching it. So I get it. Okay, I'm trying to do my best to communicate something that just isn't taught. And this is what I mentioned earlier in the video. Just because you may have someone share a video with you, okay, that's mentorship grade, and it's like, oh yeah, I have his month number 4 lessons, and it's this and it's that, so I have his mentorship. No, you don't. You have the same thing you all are watching right now, where I'm demonstrating something that I know like the back of my hand, but nobody else is able to use it all because I'm not done teaching it. It's 27 years of experience. You cannot condense that down into one video. You can't. No one can. Because there's so many moving parts and so many things that leads to mastery. And that sounds arrogant, I know. But it's the truth. You're not going to find this with a one video solution. There's no one silver bullet solution in trading, especially with the things I teach. Now, you don't need every facet of my mentorship to find a niche where you're able to go in and engage. But what I mentioned earlier is I'm not worried about the bias, because if I understand at this point here to here, now I'm not going to sit here and count every single candle, but this is something I want you to do as a viewer. I want you to count the number of down days versus the up days in this fractal. Okay, a fractal is the segment of price action from here to today's low. Alright, so from this candle's high all the way down to today's low, count how many down candles you have where the open is higher than the close, or I guess the easiest way to say it with the value behind it is every lower close day. In other words, in this case, every down close candle, to me, I represent that with a black candle, and every up close candle is green. From this high to this low, you can see the majority of the candles are down. So that means every single one of those days, until we get to this level down here, if you're a day trader, you want to be going short. If your objective is to get 50 pips a week, okay, how hard would it be to get 10 pips in one day over the course of a week? Starting with that objective and then growing from there to maybe 15 pips a day, and then 20 pips a day, and then learning to trust this big type of move and work within the weekly range and try to get a very premium price level, in other words, an elevated expensive price level that shouldn't stay expensive for a long time until it eventually starts to gravitate towards this low down here and move to a discount. Okay, so bias is easy, but you have to have these types of narratives on the higher time frame, because if you do that, then yeah, you might get burned with 1 or 2 up close days that runs against you. But okay, how many up close candles are you getting in this grand scheme of things? That's the potential for losing if you try to trade every single day. But if you look to trade after a up close day, how many times are you met with hard selling the next day or the day after? There's a secret for you. Study that. So you have to have the logic and the context that the algorithm is going to be operating in, because it's going to reprice down here. Now, I know some of you are saying, but why should it go here? You're not saying that, Michael. Right. That's mentorship. But between this level here to here, that is the bookends, if you will, the dividers that frame that move. This volume imbalance to this fair value gap below old lows on the daily chart. It's all I'm going to cover for right now. But I promise you, if you look at every single 3 to 4 month price move in any market, similar signatures like this will jump off the chart. But you're not going to just watch this video and say, oh, I know how to do this. I'm going to go out there and start making YouTube videos and start a channel where I'm going to make all these moves. I see lots of people on TradingView, okay, trying to put my stuff on their charts. And if you press the little tab, it goes the other